Hey, Michael Hopkins from Seeking Alpha with Jennifer Warren from Concept Elemental in Dallas, where it's very warm.
It's very hot. It hasn't stopped being hot since I think the last time we talked, actually. As a matter of
Yeah.
fact, now the one thing I do every day, like later in the afternoon, is I check the ERCOT grid conditions to make sure that, we're not going to have a blackout. So far it's been pretty good. I think when we had that winter storm Uri, the state legislators really focus more on resilience, which means a lot of different things for another time. But very instructive. We haven't had any blackouts. I haven't had any. So that's been a good thing, because there's been days when the feels like was 114, and this dome effect is the problem, right? And the El Nino, the heat dome effect, all that. But anyway.
That keeps you inside,
Yes.
indoors most of the time, I suppose, and that keeps you busy too.
Yeah,
So talk a little bit about what you've been working on, things that you've been seeing since we last talked.
sure. I've been working on this feature that's going to be coming out in the energy edition in the fall for DCEO. I did the last couple of years I've done them. And this one's really going to be interesting, I think, because in the past, there's been a big producer fundamentals focus and, the trends with that. But now I think this year it's going to be laying all that on top, all those fundamentals, plus sort of almost more applied in some respects. So that's going to be interesting. And that's all I can say about that. But needless to say, I'm doing a lot of research, and some of this, comes into, and then I try to use it for investment thesis ideas, because you're sitting there thinking about all these things, you're seeing, seeing things differently. And then also just putting together some of the material, just keeping the conversation in my own head going for this keynote I'm going to do in Montana in October as well, before the energy edition work. But we can, did you have anything else before I hop into these slides? Let me screen share, and we'll kind of like look
Go ahead
at
and jump into those slides.
some things I'm thinking about.
Yeah.
Okay. There we are. So this is DCEO, and I was just gonna do a shout out because they just won the 3 years in a row the country's best regional business magazine, and it's, the stories are really great, but also their creative directors and everything, the whole creative team. So the editors, the creative team, the publisher, and they're the ones that have been working with me for all these years with the shale booms. And actually, I started with them in 2006 when the magazine first came into its existence. And so they just, deserve a lot of credit for telling stories, just, I think, the right way, what they are. There's no, they're not trying to be partisan. There's no position. It's really, really good stuff. So hats off to them. And I'm really grateful for their support in my work as well. But trying to, hang on, something is, oh, there we are. So oil prices. So I got this chart off of Bloomberg. The Citigroup analysts were saying that, there's a floor around 70 for, this is Brent, the global benchmark, with an expected $90 ceiling. So that's kind of where we've been. And also just in the last 6 months, we've been a bit in the lower range on oil prices, and that's starting to come up in the last, few days even. And what's interesting is if you compare their sort of their analysis, their range to, this is something that I pulled from the Dallas Fed. And basically what it's showing is that the producers that they queried believe that WTI, which is the US benchmark, is going to be in the range of 72 to 80. Now, okay, so that kind of overlays with the Brent City range a little bit, but the thing to remember is that now WTI is a constituent of the Brent index. And so there's just a little bit of, variation, I think, that's starting to happen with these oil prices. That's almost like a whole conversation unto itself. And so with WTI, West Texas Intermediate, being a constituent of Brent, some actually are saying, that I've been talking to, that they believe the true price is higher, that it, there's been some hits to price because of the demand sentiment, with potential recessions and China demand and things like that. And so that's a little bit more bearish than what some producers think that the true price really should be, and that the truth of that will reveal itself in the next 6 months to a year, when we get a better fix on what's happening and inventories go down and things like that. So the other thing I wanted to talk about was oil production. So this is, just showing by state. Obviously, Texas is the largest oil producer. This was from April, 5.2 million barrels a day, but the Gulf of Mexico, 1.6. And then you have 1.8 million barrels a day over here in New Mexico on this side right here. Now, that is also the Permian, largely driven by the Permian, because the Permian actually extends into New Mexico. So, the Texas Railroad Commission doesn't get to count New Mexico's production, but if you put it all together, it's a different story, because that's where the production is happening. That's where the players are, right? So in talking to a producer, they were just saying that, our oil production has started to recover now from pre-COVID to pre-COVID levels, roughly like 12.5 million barrels a day. And that's expected to increase in the Permian, in US production in general. And there's a peak at some point. We don't know exactly when that is. This one chart I'm going to show ahead kind of, gives you what the IEA, which is the Paris-based group, thinks. But I don't know, just a thought that came to mind was that some of these volume increases that we focus on, we're always focusing on growth. I feel like those are becoming a little less relevant when you talk about the peak, and that what's more relevant is like the quality of production. So it's this whole supply, demand, price equation that I think is what has to be focused on, instead of just like, oh, the growth of production, or you have to look at the interaction of everything, and then that gets at what's a good investment. What are the firms you want to be invested in? But oil has resource dynamics, right? Minerals, the same thing, when we're talking about the energy transition. And then this is just natural gas by production. Now, what's really interesting is, we focus on here, like Appalachia, the Marcellus, this whole region. But if you look at Texas, like Appalachia is like almost 21 BCF. Texas is almost 31. Now, so it means Texas is the largest gas producer. And a lot of that has to do with associated gas, because that's what happens when you produce oil. There's a lot of associated gas. So a lot of that gas is going to get exported. That's sort of the takeaway. And one quick thing I just wanted to say too, going back to the crude oil. So up here, this 1 million barrels a day, this is the Bakken area, and then here's Colorado, the Niobrara, it's Wyoming. So, and then here, this Oklahoma, that's the Scoop Stack, and there's some different players there. I just didn't want to forget others. So the other thing I wanted to mention was, now this is the change in our crude export destinations, where we're exporting to from 2021 to 22. Now, this captures, right, the Russia invasion of Ukraine. And obviously, we picked up a lot of this extra in the blue. This is all Europe. We picked up a lot of that. In Europe, if you put it all together, the change in destinations, it's like 450,000 barrels a day. Let's just call it, 500 million thousand barrels a day. And then with Asia, this is in yellow, that's about 260 million barrels a day, no, thousand barrels a day. This is the change, sorry. And it's Asia developed. So we're exporting more to Europe, and then Asia developed as well. And interestingly, what the reduction in destinations has been China and India. Now India has been getting more exports from Russia because they're not participating in the sanctions like the rest of advanced economies for the most part. And then China's its own case. So that's kind of interesting. And the only thing I really want to say about it with crude oil exports, they're important for the United States, as are LNG exports. Now, this is a chart I got from The Economist, and their article was basically about Latin, just showing the increased production in Latin America that's coming online. I'm trying to, okay. And so they were just kind of discussing some of the growth in new oil supply. So US is here in this turquoise. Latin America is this darker blue. UAE here in the middle. Saudi Arabia, the darkest, and then non-OPEC, other OPEC. But what's kind of interesting is obviously Latin America, there's some steady growth production coming online, and it's both Guyana and Suriname, and Exxon is a big player in Guyana. And so that production is going to matter here in the future with growth. And then you kind of see US production, slowing. And now they're saying this is the change in oil supply capacity. The way this is presented, is kind of, it's one picture, but it's not a complete picture to my mind. About the only thing it really says to me is that, Exxon's going to do well in Guyana, and there's other players, but that's just the one I'm talking about because I'm well aware of that production. And again, I think it gets back to the quality of production as opposed to just growth, because ultimately, a return is involved, right, for an investor. So, and then we see here these gray, this is all negative. This is Russia. This is reflecting, a lot of reduction to Russia production, and and whoever else is offline, for various reasons. Now, these are just some stocks. I just wanted to kind of have a look at things. This is 3 years. And what's really interesting about this is this was when the pandemic started. So this is kind of instructive because it does kind of reflect this, how things have moved through the pandemic and the recovery. And, what started happening here is this is COP. Now, interesting, COP, ConocoPhillips, has really kind of, increased quite a bit. Let me try to see if I can move this down a little bit. Ugh, I can't. Hang on. There we go. And XLE up, triple Q, up less. Here, the triple Q's down here. If you look at it, holistically, from the whole period. Now we know that part of this rise with energy has had to do with, in the pandemic, everything went down so low, that, everything just, tanked out. And it was just like the bare minimum. And so that's what this reflects. And so my point is going to be, and this is just the year to date. And then if you look at just the year to date, we'll look at triple Q, it's up. And one of the points I was going to make is just that, I think with interest rate rises and expectations, everyone got really excited about AI and the NVIDIA day in tech, and it seemed to boost. And then today we've had a different story. There's been a bit of a coming down to reality with earnings starting, and we've had some news that's a little bit takes some of the air out of some of the triple Q stocks. And so I think what it says to me just that, we still haven't seen what a recovery looks like post-pandemic. When you lay on interest rate rises and how that changes the dynamic of investment and what projects are going to be taken on and what the return thresholds are going to be, that's getting sorted out, right? And so for me, I still, like I said, I still am weighted quite heavily with energy because I feel like it's, it is the constant and it is the need. And regardless of the energy transition, hydrocarbons are going to be with us for a very long time. And, and there's movement on the rest, and that's, growth areas, and you even see Exxon, having some new announcements on some of those things. But I think that was and this is today, just showing what I was saying about, now we've got the triple Q, because we've had all these earnings announcements, the triple Q amongst energy stocks, and then iClean is kind of more like a clean energy. Everything's just kind of, more, in line with each other. There's not anybody that's really excelling except for COP still, and then oil. And this is reflective, this CL1, that's reflective of just oil prices going up over the last couple of days. So I will stop sharing.
So I guess one thing that I didn't, when I was looking at the slides prior to the conversation here, I didn't catch a key item that you brought up here during the slides, and that is, not only do people pay attention to the numbers when it comes to production, but you mentioned quality of production. Maybe talk about a few companies in that could be something that could be looked at, or how investors might look at this key element, because I do think it's a key element when you talk about not just
Yeah.
a lot of energy and a lot of oil and gas, but again, quality production might be the key here for investors to take a look at that maybe they haven't taken.
Yeah, I mean, I think what you're getting at is sort of this, and this is something that I've talked about in the past, and that's this flight to quality. This flight to quality idea really started once we saw that we were coming out of the pandemic. That was one of the big reveals of it, right? And I think on the energy front, I think that is why you see COP, CVX, Exxon doing well. And they're the top, they're like a top 5 producer in the Permian, for one. But also they have some, I know that I'm not sure where all COP's production's coming from, but obviously they've had some good news. I don't follow them closely, but I understand what Exxon's is about, because they're sort of, like I said, they've got the Guyana, and then they've been doing a few investments in energy transition and CCS and that sort of thing. And so I think that's why you're seeing some positive news around that. And that's just long-term, growth capital potential. And I mean, we've seen that movie before when, they were trying to do biofuels, but now they've kind of decided that for now, I mean, they're still doing biofuels, but, and Chevron's come out with their version of the energy transition increasingly. And we've talked about that with sustainable fuels, which I like sustainable fuels. I think that's really a smart, sensible strategy. And so one could look at who's, what majors, what firms are playing in that space. I always like the bigger players that are diversified, so that if something doesn't work out, that, there's still the backup. There's some things in the energy transition I am less, attracted to, and I have question marks before I would, put further money in those stocks. But also, like, Pioneer is a stalwart, in the Permian, quality, FANG quality. Those are just some that come to mind for me. So
So I guess then getting to that, I mean, there's obviously a lot of big names that you mentioned there at the beginning, like the big oil the big ConocoPhillips, the Exxon, whatever. But there's got to be other smaller companies that maybe it's Pioneer, maybe it's others that have that big focus on quality of production as well too.
yeah, I mean, Pioneer is, they're a very large independent. So the large independents, are also would be candidates, but you have to look at their production and a lot of things. And I don't sit there and spend a ton of time looking at all that and looking at all the players anymore. I'm very much focused on the macro picture. And then if, somebody catches my attention, I'll look at them. But otherwise, I kind of watch my bellwethers, because I'm not trying to, diversify amongst a bunch of different producers. I stick with quality, because I'm not going to lose money, if I can help it, so that's just me.
So do you want to talk a little bit about the macro picture? I think that still is something that people look at, especially when you think about things, the Fed coming up next week. Everyone's always looking at inflation, jobs report, and I think what you do a good job with is how that ties into energy and how investors might look at energy. Is there something that maybe people should be looking at in terms of that picture?
Yeah, I mean, I think it's something we talked about before, and that's just that there's like a ceiling that we're hitting on, how high interest rates are going to go. And I think we're coming up to that point. And so I feel like, we're kind of there, because what they do next is not going to be, big rise, what, a quarter, half, ultimately. Inflation is coming down. Now, I don't think we've seen everything to do with jobs yet. I'm not sure how that's changing, because we also have the dynamics of work from home, that are still kind of filtering in. And I really don't know what that means for production. I mean, you can be extremely productive working from home, but I think there's also the case of, but you also need to get with people. You need that one way or the other, whether it's, on Zoom. There's just something about, being face to face. And therefore, I can always say that I think AI is always going to have limits. I started thinking about some of this, some of the AI air is being let out, a bit. Now, there's still a lot of excitement, and you still see firms, hitching their wagons to AI's potential, but I actually had a software engineer, they're Gen Zs, and they were just like really fed up with all these firms, hitching their wagons to the AI story, because there's, it's a thing, right? It's a, it can be a good thing for productivity, and but there's a lot of limiting factors. And we saw that a little bit today with what was happening with chips, right? The news today on chips, and just, the sort of softened earnings outlook. My semiconductor ETF, took a bit of a hit. But it's just, you're seeing some of the effects of some of the things that we talked about and I talked about on my video, my AI chips and energy video, is I really dug into what these dynamics are. And if you just watch that, you'll see exactly, you know, what the economics of all this is, and that computing power, you know, is supposed to get more expensive, you know, to get those increases in that growth. And so, you know, there's a little bit of a tension with that. So, and with regards to energy, you know, perhaps it's not a bad thing that there was a little bit of a, you know, some of the air coming out of, you know, what was going on with tech, because at the end of the day, all this runs on with energy, you know, and resources, you know, are finite to an extent. And we can say, oh, we'll just add renewables, but renewables are comprised of critical minerals. So that's a resource, right? It all works back to resources. And so, you know, we just have to be using them wisely, and you can't just lay on a ton of quantum computing power and, you know, for AI and think that that's, you know, I mean, there are constraints to the growth of that. So I just, you know, I'm just sort of like, I think people are starting to see through some of the excitement, and not that it's not valid and important, but you just sort of have to look at it with, you know, a little more objectivity, you know.
So let's go back to one slide that caught my attention here. I don't mean to be jumping around here, but the one slide that I think may stand out from this conversation is the export slides, where we're exporting to. I don't think people realize, I don't think they think about exports. Maybe they don't think about exports, but maybe they don't even really think about where our resources are being exported to. I think the question is this something that can be sustained for us? And then would it still be the same destinations? You talked a lot about Europe and like developed Asia on with that one slide.
Yeah, I mean, know that our exports are important, because we have the level of production that we have, and we also have, you know, our natural gas demand is at a certain level, and we're not going to grow that a lot more. We're a highly developed economy, right? Same with oil consumption, especially if, you know, you have EVs that are going to, you know, cut some of that oil, you know, oil demand a little bit at the margins. You know, I don't know that it's going to really ding it hard. I don't know that answer, you know, and we don't know what's going to happen with technology, right? That's always the, you know, $1 million question. But, you know, I think that, you know, these are just things that are going to play out over time, and those firms, whether they're producers or midstream firms, that I think are kind of playing in that, are something to look at. So our production has to go somewhere, because we don't want to harm our industry, because it's a source of strength, you know. So I mean, US production is probably one of the best news things that's happened to the oil market in 10 years, you know. And so I don't care what you say about the energy transition, it's important. And, you know, it's, you know, it's just, you know, there's growth in that, absolutely. But there's got to be a realistic, pragmatic approach to it, because we have all this infrastructure and we have all this industry. And it's a very important dynamic part of our economy, and they're only going to get better at producing. It comes back to that quality. You know, we're a high quality producer. We're a ethical producer. Our barrels are increasingly, you know, cleaner barrels, and same with gas. And so, you know, we should be the ones producing. And so, and it, you know, we're at a certain level, and, you know, maybe we peak at a certain point, but that's still, it's a depletable resource. So that treadmill's always running, you know, to keep the production to a certain level, you know, because it's, you know, it's depletable. So so I just think it's really important that we are an exporter and we're not beholden to cartels and things like that.
Mm. Well, yeah, and it's very diverse. I mean, we're not just talking about big companies. We're not talking about just Texas. This is, nationwide. We talked a little bit before and after about the other states that are, in this, that are producers as well.
Mhm.
And I think the other thing that resonates with me here on this conversation is previous videos we've done where we've talked about things like infrastructure um, in the industry and how big it is. I mean, you know, and again, you say you kind of ask the question for me. It's that quality. It's not just the companies. It's this whole big machine, I guess, or machinery that keeps things going in terms of not only what we do for energy here, but energy elsewhere as well too.
Yeah, I mean, like there's a lot of countries that are developing, obviously a lot of our exports, that I named on oil, it's going to a lot of developed countries. And in some of the more developing countries, some of them are producers, some of them, are closer to OPEC countries. It's a very dynamic, diverse market, and I don't think any one group can do it all. So it does really take, it takes the whole global village to do this, and to make everybody's boat rise, so to speak. And the same with natural gas. I think we're the top natural gas producer, we're the top oil producer in the world now, and so I think that's a really good place to be. And you know it's going to be interesting over time to see, like in Latin America, with this additional production that's going to be coming online there. I mean, a lot, their economies are going to develop more. They want economic growth. They want to do it right. And I think with a firm like Exxon that's focusing on, ESG and doing things efficiently and trying to decarbonize, I think that's a good thing for them. So it's going to be really interesting to see, how some of these dynamics shift over time. This energy transition and the issues with minerals and mining, this is going to go on for a very long time, and it's not going to get sorted out in 1 year, 2 year, 3 year, these supply chains and everything. It's going to take time, and things that can change with technology, to make lithium demand go down. What if we're doing, making batteries differently? What if, there's just all sorts of innovations that can happen that changes the dynamic, right? The breakthroughs and like shale was a breakthrough. People they don't really recognize that, but it was, because we went from declining production to being the number one producer in the world, whereas before we were importing from OPEC largely, in other countries, Venezuela, Canada's fine. We kind of, work together, our systems actually. So yeah, so they do matter, and our role as a hydrocarbon producer and all of the cogs in the wheel to do with infrastructure matter. And we can share our expertise, just like what we talked about with solving Europe's energy crisis. We have George Yates over there in Europe trying to help Spain produce their own resources. The UK might change courses at some point, because they're kind of letting that North Sea production go. So you just don't know what's going to change things in the future.
So let's to wrap things up, just about the investment implications. What are you thinking in terms of when you talk about all this stuff, what investors should be looking at?
Well, I still, again, flight to quality,
Mhm.
strong US producers, maybe those that have some export weight, in their revenue streams, those that are being progressive and looking creatively. So, and then I do have I have my triple Q stocks, and I'm not giving up on my semiconductor ETFs and anything like that. I mean, I always like to have some things because it forces a discipline to make you watch, you know. I mean, I know there's a lot of, other investors, traders that, change up this and that, but mine's really just kind of gradual. I mean, I will add things, like I've added more tech in, and then over time, if I feel like that's not the way it's going, then I just shave those. But I always keep a base of my energy portfolio, and kind of, and it's, obviously with the price, the sort of like bearishness a little bit on prices, that's just part of the ride, and so you just ride it out. I do anyway, because I know it's a constant, and I have no qualms about the direction of hydrocarbons over the next 5, 10, 15, 20 years, so.
Cool. I don't know if you want to talk to wrap things up or give away anything about what you're going to be working on next. I think you kind of alluded to some of that at the start and
Yeah.
maybe coming onto the wraps, but it does sound like our conversation here and before the video sounds like you got a lot going on, a lot of good stuff going on.
Yeah, no, I definitely am, cranking on the research, you know, so, and then what it means, and just, keeping an eye on, you know, the energy transition and geopolitics, sort of my normal fodder, so anyway, thanks for having me.
Yeah, I appreciate the time again, Jennifer. Thanks again.